Hello, everyone. Welcome. Thank you for joining our webinar, Egypt's Corporate M&A and Investment Opportunities in 2022, presented in partnership between the Legal 500 and Matuk Basuni, the Cairo-based full-service MENA law firm. My name is Alan Cohen. I am a research editor at the Legal 500. And before I hand over the webinar to our panel, I'll give a brief introduction of today's topic. So as the title suggests, we'll be discussing mergers and acquisitions and business opportunities in Egypt, and more specifically, points including market entry and doing business in Egypt, potential headwinds to M&A and recent equity market volatility, sell-side strategies, especially maximizing value and separating assets, and limited warranties and indemnities. But first, let me introduce Omar Basuni, who will moderate and lead us through the discussion. Omar, do you want to say a quick hello so everyone sees who you are on the screen?
Absolutely. Thank you very much, Alan. It's a pleasure to be here, and it's a pleasure to collaborate with Legal 500 and our esteemed panelists that have joined us today. And I look forward to that presentation, and hopefully it will be fruitful for the audience. Thank you very much.
Wonderful. Thanks, Omar. So everyone, Omar is a founding partner of Matuk Basuni and is consistently ranked in the top tiers and bands of legal publications in the areas of corporate law and M&A. For his expertise in setting up joint ventures and new projects in Egypt, as well as to ensuring compliance with local laws. Omar is also recognized for his negotiation skills and business sense. And in fact, he focuses on all corporate matters, including M&A, of course, public takeovers, restructuring and cross-border transactions. And actually, in addition to corporate, he has significant experience in all aspects of investigating and doing business in Egypt. So I'll hand over to you in a moment, Omar, but before that, I would like to let our audience know that the session is interactive. So if you have any questions at any point during the webinar, please submit them using the Q&A function. It's at the bottom of your screen, and we'll put them to the panel once the discussion is over. Okay, then Omar, I'm handing this over to you. Feel free to introduce the topic further, as well as the panelists who are joining us today, and lead the conversation.
Thank you very much, Alan. Thank you very much, and again, thank you very much, and to Legal 500 and our esteemed panel for joining us today.
Pleasure.
So maybe I'll start, sort of giving sort of a general trend on M&A trends globally, and based on some research we've done with some of our best friend international law firms that we closely work with, and then maybe I'll dive a little bit in depth so far the Egyptian M&A landscape and the trends and new developments in connection to that. So notwithstanding COVID last year, 2021 was a record-breaking year for M&A globally. We've seen some of the biggest transactions being announced and closed across different sectors. We're seeing, and that probably has been fueled by the relaxation from COVID and the visibility and the certainty that wasn't there in 2020 in terms of how M&A and how business would continue developing in a COVID world. I think everyone now sees, or at least we hope that we see ourselves in a post-COVID landscape. And I think that has been illustrated by the amount of M&A transaction globally, across all the sectors. And, we see some of the landmark transactions last year. As far as Egypt, again, 2020 again for Egypt was a fantastic year for M&A. And I think Egypt had a great momentum. And that momentum was fueled by a number of factors. One, we had major government reforms, and whether from a legislation standpoint, from a policy standpoint, to try to attract foreign direct investment and really create a user-friendly atmosphere and environment for foreign investors. So we've seen, for example, a new banking law that came, less than a year ago. We've seen amendments to the capital markets law. We've seen amendments to the companies law, where finally now, companies can have preferred shares, something that we've been lobbying for many years with the government. We've seen, and we've seen also a change of policy that really is illustrated by a genuine willingness by the government to attract foreign direct investment, understanding its importance, and really trying to put Egypt on the political landscape. The second factor that I think has fueled M&A in 2020 and going, hopefully, continuing, notwithstanding the current, global crisis with Ukraine and Russia, is political stability. In a very turbulent geopolitical Middle East, Egypt, from a relative standpoint, is an oasis of stability. And that political stability has really given a lot of confidence to foreign investors, whether private equity or strategics, to really come and deploy and be able to really, look at Egypt as a place to do business and to invest and to do, decent returns. in terms of Egypt specifically, also in terms of the trends we've been seeing, I think 2020 and 2020 continues to be dominated by private equity. If you look at the amount of transactions that took place in Egypt, I think private equity remains the predominant players. We've seen strategics across certain specific sector, but really the M&A sort of momentum has been fueled by private equity, and I think that's globally a true trend, but also illustrating that Egypt, where we're seeing these private equity, whether coming from the GCC or coming even from the US or Europe, investing and looking at specific sectors. In terms of sectors, I think the four most interesting, most sector that we've seen M&A deal flow pouring in was one, renewable energy, which Egypt has been really investing and trying to take these as far as renewable and really trying to have reinvestment on top of the agenda. And as you know, Egypt will be hosting the next conference on the environment. Secondly, I think healthcare, FMCG, and education. And if you look, the common denominator between these four sectors is demographics. Egypt today has a population of 110 million. A young population, and accordingly, these four sectors clearly have been destinations for FDI and for M&A because they're fueled by the demographics. And accordingly, it's been a great year. Now, unfortunately, of course, and I don't think this is specific to Egypt, but this is specific to everyone else, is the recent turmoil with Ukraine and Russia, which I think had a global impact, but also mostly on emerging markets. And Egypt, being an emerging market, unfortunately, has taken some difficult sort of hits from the repercussions of that crisis. As everyone knows, there's been a recent slight devaluation of the Egyptian pound. There's been a lot of investments sort of coming out of the stock market, but notwithstanding that temporary crisis, and I hope it's a temporary crisis because it has serious repercussions on the economy of all emerging markets, but also Egypt. Egypt is the #1 importer of wheat. Egypt is one of the big importer of oil and gas, and if you look at the prices of oil and gas and wheat over the last few months, you see a major escalation in pricing, which accordingly has created a serious deficit. Hoping that this is a temporary crisis and hoping that peace will prevail, we are confident and we are hopeful that we will continue to see a very strong M&A momentum continuing for 2022. So I think that's just sort of, maybe I don't want to bore you too much, but this is sort of a general overview in terms of the M&A landscape. And I maybe will leave it to Mohammed maybe to touch base on a very important topic that we're seeing in Egypt, which is the fintech space, which has been attracting a lot of investors and startups and really putting Egypt as a landmark destination for fintech.
Yeah, thank you so much, Omar, for for passing through. Yeah, I really want to touch up on the changes and the legislative changes which occurred in Egypt in the last 2-3 years. And honestly, I've been always saying that we've been expecting a big bang in legislation, and when it comes to financial technology. And we've seen since 2016 serious steps towards financial inclusion and promoting financial technology generally in Egypt. First, by amending the wallet framework in Egypt, issuing the first regulation when it comes to payment aggregator and facilitators. As since maybe 27, we've been seeing payment service providers working, but the framework was not clear. So now we can surely set out that the CBE and the government, generally speaking, is having sure steps towards having a complete financial inclusion and cashless to a large extent in Egypt. As Omar just touched base, we've seen amendments in the banking law, and I think that was one of the major amendments touching on the fintech ecosystem. We've seen for the first time that the banking law reserved a complete section for financial technology and specifically for payments, given that more than maybe 50-60% of the fintech ecosystem consists largely of payment companies. And also we've seen maybe 1 year before the issuance of the banking law, the establishment of the Supreme Payment Council, which, as a direction of the government, one of its main purposes is to have the financial inclusion, a cashless economy, promoting financial inclusion, and the result of which that we can see is the Egyptian market is now the fourth funded country when it comes to fintech investment, and almost the second in the Middle East and Arab countries. We're having more or less 23% of the African investment was towards in Egyptian fintechs. So having that said, one of the most important things is for the market to familiarize with the changes that occurred in the fintech ecosystem. And if I can give just a quick heads up, as we touched on the banking law, now the banking law provides the CBE with a broader power to regulate fintechs, banking fintechs, either through partnership with banks or through the banking sandbox. And also, early this year, in particular in February 2022, we've seen the NBFI fintech law, which is the non-banking financial law governing the fintech ecosystem. And now some people might see a bit of confusion between both laws, the banking and the non-banking. However, it makes an absolute sense because usually the payment sector or the finance sector is usually segregated between banking and non-banking. And it's clearly, at least to a large extent, clear what are the competencies of the NBFI law governing mainly the non-banking financial activities using technology while providing their services, as just for instance, consumer finance, nano finance, insurance tech, SUP tech, which is surveillance tech, or reg tech, which is mainly for companies to be compliant with the KYC and the ML requirements. So we believe that that was the move from the government to pave the road for a complete, seamless and fintech-friendly ecosystem. Yet we're waiting for a lot of clarification when it comes to regulations, either for the banking law or the NBFI fintech law. We're expecting within this year, maybe before the end of this year, to see finally the electronic KYC and other very important regulations. We're expecting the NBFI law also to shed more light on the electronic onboarding, digital agreements, how NBFIs could now onboard on seamless basis clients completely without any paperwork. Again, that would take definitely some time for the market to adapt and for the regulators to test the market and maintain the equilibrium between disrupting the market while maintaining a peaceful, stable economy. So yeah, I believe we have a lot to discuss on when it comes to fintechs, and definitely we'll be happy to respond to any of your questions. So I leave it also to the panelists if they have any questions or they wish to give us a speech.
Yeah, thank you, Mohammed, very much for this quick overview on the new law, the new fintech law. I believe that what you said is entirely true and to the point, because having the fintech law regulates the market more, and being a growing economy here in Egypt, and with a lot of developers, we are ranked on the top 20 countries for having developers, Egyptian developers, among other like India and Russians and all other countries. This opens the door for entrepreneurs who are starting to work in the tech industry, and not entirely, it's not only for fintech per se, as you just mentioned. There's insurance tech and all other tools and microfinance and all of that, that would enable the vision of the country for having a paperless and the initiative of the president to have the paperless transactions, and to have more vision on the economy in terms of the supervision, because Egypt, there was a statistics that Egypt is having 40% black market. The black market here in Egypt does not give quite the overview for investors, because it gives false results and doesn't put Egypt in a very well position in terms of funds and investments. Also for the law, there's some critiques that I believe is quite true, because the grace period of 6 months for the decisions to be out is the same period that is granted for companies who are already working in the fintech to adapt to the new regulation. Also, the minimum capital for startups, and there's no like definitive framework where all the companies, like legal framework, where all the companies, what should I do and what should I not do in terms of registering a fintech company. So hopefully we will be waiting for further on-ground guidelines from the authorities to help entrepreneurs start seamlessly. And hopefully this should be out and in alignment with the executive regulation for the personal data protection law that should be out this April, hopefully. So thank you for like paving the way with all this information. I'll leave it to other panelists to comment or ask a question.
Wonderful. Anyone taking over?
Yeah, thank you guys for the invitation. It's very interesting for me to hear all of you. Maybe I just have a question, and I have seen one of the question on the chat channel in relation to is there any better mechanism for FX and how to manage the risk of FX. Maybe my question is totally related to the FX and what's going on with the devaluation and the free flotation occurred during the last days in Egypt, and to what extent this would impact the M&A business in Egypt, and also all other sectors, including banking system and so on. Maybe I have some view about the FX mechanism and to what extent we can find a creative solution to mitigate any FX risk. But I will leave it for you just, and then I will speak about my part in relation to banking sector and how we can manage the FX risk. But I will leave the floor to Omar Bassiouni to talk about to what extent the current not fluctuation or volatility, it's clear free flotation on the Egyptian pound, and to what extent that would impact the M&A sector.
Sure. Thank you very much, Ayman, and absolutely on point. Again, maybe taking a step back in terms of explaining to the audience, what actually happened over the last few weeks. Again, the sort of the devaluation of the EGP that took place, about 10 days ago, was a direct result of the economic repercussions of the Ukraine-Russia conflict, right? And as I touched base earlier, one of the implications that happened, or one of the repercussions that Egypt suffered as a result of that conflict, is sort of the outflux of investors from the stock market and carry on trades that were basically investing in T-bills. And whilst Egypt, lost about $15 billion, according to some estimates, in a span of a week, which is unprecedented, right? Because, at the end of the day, from a political standpoint, from an economic standpoint, everything was going, the wind was blowing in the right direction, the wind was blowing in our sails. And I think that external factor was not foreseen. And the implication of that factor in terms of the outflux of foreign currency in such a small timeline from all these other sources, has really put pressure on the Central Bank of Egypt to basically try to mitigate the situation, and I think they were compelled to do that devaluation. And you know, if you had looked before the conflict, and in terms of currency stability, Egypt was on top of the food chain, right? And the EGP has been relatively stable over the last few years, against the dollar, against the euro, and accordingly, that external factor could not have been foreseen is really the direct result, of that conflict. And again, because increasing the expenditure and increasing, and stressing the resources of foreign currency on the government. Moizen, did it impact M&A transaction? Absolutely, it did, of course. And I will tell you, every transaction that is currently being negotiated in the firm, one of the big issues is FX, right? Because on most of the transaction, there is a foreign party. Unless it's an Egyptian transaction with two Egyptian parties in EGP, then it's not relevant. But in most of the other transactions where you have a foreign party that is actually buying or selling in foreign currency, obviously it's an issue. What do we do? Well, we sit in the meeting room and we negotiate for hours and hours and hours. And but ultimately, I think nothing. The standard banking mechanism that you see. If it's a very large ticket, then typically you may consider hedging. Foreign currency risk. And the problem with hedging is cost, right? It comes with a cost. With the banks, and accordingly, it can only be viable in certain situations where you have a very large ticket, a very large investment, where the hedging cost can be justified in that conflict. That is one issue. The other issues that we've been trying to be innovative, right, outside of the traditional sort of hedging solution, is to basically advise clients to basically share the risk, right? So effectively, we would try to restructure the purchase price with an earnout, so that effectively, to try to capture any appreciation of the EGP in the future, or try to mitigate the loss, the devaluation risk by performance. So earnout structures have been more common, or at least are on the table to be discussed, where today you're trying to share the risk of FX fluctuation between the buyer and the seller. So that's probably one of the most trendy sort of solution we've been trying to address the FX situation. But needless to say, Ayman, it is an issue. And I think the big issue that is the uncertainty, right? Because once you have you have a movement in the currency, and everyone is saying, is this the end of it, or is this the beginning of a series of devaluation? Of course, I cannot predict it. No one can. We'll see what the discussions with the IMF. As you probably know, Egypt has started discussions this week with the IMF. We all know that usually, discussions with the IMF come with strings attached, and so we're hopeful. We're hopeful that this will be the end of serious fluctuations of the EGP versus the dollar. And if you want my personal expectation, I think if the situation in the Ukrainian-Russian conflict, I won't say resolved, but sort of de-escalates substantially, and then it will definitely have a direct impact on currency fluctuation in Egypt. I hope it's answered the question, Ayman, and I remain at your disposal.
Yeah, sure. Thank you, Omar. But for me, I found that maybe to the best of my understanding, because I'm not that expert in the M&A, but to the best of my understanding, of my knowledge, that the valuation of Egyptian pound versus other currency would be very helpful and very lucrative for other foreign direct investment and FDI, just to step in the Egyptian market with competitive price in terms of how to acquire company in a prices that would meet their expectation, and also to inject more investment in terms of to what extent or how much the Egyptian pound now versus any foreign currency. So that's really helpful for FDI, just to make it more lucrative from a positive side, not.
No, absolutely. Look, it makes the cost of production cheaper. It makes our products more competitive. Definitely, there's a lot of advantages in a structured devaluation. The problem we're having as lawyers, or as M&A lawyers, is we're in the middle of transactions where you have term sheets that were fixed in USD, or what I mean. And today, the buyer saying, well, that amount does not correspond to the performance of the company, and this is how you try to mitigate and adjust that gap. But on a general level, on a macro level, definitely, I think it makes our products more competitive. It promotes exports, so definitely it will. We expect that you see a surge in export because Egyptian products or Egyptian-made products become more competitive on the international landscape. So you're absolutely on point on that, and I concur.
Thank you.
Also, if I may add, and Mr. Omar can, of course, correct me if I'm wrong, I believe that the current situation in the market would allow from a governmental perspective to retain the hot money or the FDI inside the country, because the FDIs might think that I'm not really getting the value of my investment. I'm not getting the real value of my dollars. So this is why I need to keep the price of the EGP in real value to retain the FDIs and attract more. And with regards to the Russian and Ukrainian conflict that's happening now, I believe that the Russian oligarchs are now shifting their investment to the MENA region, and they are trying to direct their investments into Dubai and Egypt, because they are thinking that it's a politically stable economy where no sanctions as per the European Union or NATO would be reaching them, no seizing of their properties. So I think this, in terms of the current conflict, Egypt is on the right path internationally, because this might affect the wages, because the wages might, like it's cut in real value 17% or something for the Egyptian nationals. And of course this would promote people like exporting services, even not just exporting products. So I believe that's the situation, if I'm not mistaken.
No. I think you're absolutely. I think you're absolutely right, and I think insofar T-bills and investing in T-bills, I think Egypt has been a huge recipient of investment in T-bills over the few years, and one of the reasons why the government just increased the interest rate to 18% is to really attract and continue to retain investment in T-bills. I'm personally always a bit scared with T-bills, because it's money that pulls right away, but immediately diminishes at the first sort of sign of instability, whether geopolitically, economically, nationally, or globally. So it's a double-edged weapon, effectively. But it touches base on something you mentioned, exports and imports, right? And if you look at one of the repercussions of the current I don't want to say crisis, but the current impasse that Egypt has in terms of foreign currency has been trying to curb importation, and and just maybe share some of these developments. So, for example, there has been there are directives by the central bank to try, to the extent feasible, curb imports of non-essential products. There've been another movement, which is not related to the Ukrainian crisis. As Egypt today has sort of enshrined a first system where customs clearance for imported products happens through NAFISA or the ACI system, which is based on blockchain technology. And I want to touch base on something you mentioned earlier, paperless. The Egyptian government, we worked actually as a law firm, we worked with the Ministry of Finance and MTS in terms of putting that system together. I know it's not very popular, and I think everyone is sort of still trying to find their way as to how to navigate into the new importation system. But the raison d'etre of that system is very interesting. The Egyptian government estimated that customs evasion for imported products was at 150 billion Egyptian pound per annum. And the reason, and one of the main reasons, is that it wasn't paperless. You know what I mean? And there was a lot of manipulation, whether by exporters, importers, or even some creating a paperless scheme based on blockchain technology. And I think, if I'm not mistaken, Egypt is the first country to adopt blockchain technology when it comes to clearance of importation of products through the NAFISA system. It really diminishes, the ability of customs evasions and any sort of misgivings and unlawful acts that can take place as a result of the importation or as part of the importation process. I know it's still, as any new system, it does take time to adapt and for people to understand and to be able to navigate with it. But I think it is an innovative scheme that is really not just designed to curb importation, but to regulate importation properly and to curb customs evasion. But I think what you mentioned in terms of papers is key, and that's why the whole digitalization process that the government is endeavoring into is really, once everything is digital, it minimizes human interaction, which minimizes corruption and so forth. And whenever we have a new multinational client or a foreign client coming to the firm and says, Omar, can you let us know what is the biggest challenge in terms of market entry to the Egyptian market? Notwithstanding all the genuine effort by the government to really try to reform, and move things and create a user-friendly sort of foreign direct investment for foreign investor, bureaucracy remains the biggest challenge. And as I always say, Egypt has a legacy of 7,000 years of bureaucracy, which we Egyptians are very proud of. So, you know what I mean? Align your expectation. Things will not happen as fast as one would hope, versus other countries. And I tell you, the issue with bureaucracy, and notwithstanding, again, for me, bureaucracy has two dimensions. One, there is a legal dimension. If the legislations are pedantic, if they're not up to speed, if they're not up to the sort of the expectations that a foreign direct investor would expect. But also the flip side of bureaucracy is corruption, right? Because whenever you have bureaucracy, the tail is corruption. And if you try to curb bureaucracy and to streamline the process, it does have an immediate effect on curbing down the potential of corruption. And I think paperless and digitalization are really the main sort of the main weapons in the Egyptian government's arsenal to try to fast track bureaucracy and hence the curb corruption within the public sector sphere.
Wonderful, thanks, Omar. Anyone wants to comment on this?
Oh, yes, please. Thank you, Mr. Omar, for this. And I'd like just to add, it's the bureaucracy here and the government trying to digitalize everything. We are on the right track. However, I think it's not only the only cornerstone in importation and in the whole market in general. I think that on global level, the percentage of skilled labor and of course, given the fluctuation, the access to credit and also the non-tariff trade barriers that we have here in Egypt. I think those are some of the market challenges for the market entry here in Egypt. I myself had some blockades with JOIC, for example, to import private label or a private label in general, because it needs a whole lot of still some paperwork. Like this Nafeda thing is really amazing. It needs just people to get around and know how to get around the software. However, so basically what I'm saying is those three things: the skilled labor, the non-tariff trade barriers, and of course the limitation of access to credit due to what's happening. The letter of credit is only $5,000 and everything needs to be in the CBE to allow importations. In addition to this, do you think that we are going to adopt legally the Ethereum, the smart contract per se, and have it ratifying the electronic signature law to accommodate to that? So I'd like to know your insights about that.
Look, maybe look, my personal view, and I'm a bit biased, right? Because we actually it took us 3 years to work with the Ministry of Finance and to get the Nafisa system. So again, my judgment could be impaired. But I sincerely think that the genuine efforts to digitalize the economy is going to be critical in terms of curbing bureaucracy and curbing corruption. And I think the government is aware, receptive, and there is a true willingness from every aspect from the Egyptian government to really get this to the finish line. And so definitely, so while there are challenges, and I agree with you, there are challenges. It is not a walk in the park, but it is an essential step into a very important journey. And I think while we're a bit late versus other countries that have taken these initiatives and precedently than us, I think as I always say, late better than never. and definitely I'm hopeful that these issues would be overcome. Maybe also asking Randa to intervene on importation. You know, I getting the perspective also of IBN. I'm sure importation is a big issue. So Randa, what's your experience with importation and, you know, the sort of the changing landscape when it comes to importation and the implication thereof?
Thank you, Omar. Actually, importation is a very hot topic when it comes to foreign companies, because it's the core or the main base for doing business for foreign companies in the market, and which leads that we have to resort, in this case, to distributors and business partners to allow the resale of specific products that are imported, because definitely the foreign company will not be able to perform such activities. Despite the fact that the law, which I will not call new, but the recent updates that were introduced to the importation registration laws that did introduce the fact that 51% of the company's share capital shall be owned by Egyptians, which gave a room for 49% of the shareholding percentage of the foreign company to be owned by foreigners. It's an excellent step. However, we do believe that still it's not idle, given that there are foreign companies that do not accept the fact that they get involved or they partner with local companies, Egyptian companies. I know that there are workarounds around this in terms of having the second tier, third tier, and up to the ultimate shareholders that could be foreign companies. However, the problem, on a local and governmental level authorities, it could be at some point that the application of the company that is under registration gets rejected because of the second and third tier, that they are not Egyptians. And I think this is a huge issue, because if you're coming now and asking an investor to invest in the company, you give the advice. Let's speak from a law firm perspective. You come and give the advice that you can do 1, 2, 3 based on the law, have the 5 million minimum capital, and do the turnaround of the also 5 million, have an Egyptian manager. I mean, all of these are requirements that are doable. And then when you go to the execution point, submit the application, and then suddenly it gets rejected because of elements that are not explicitly regulated under the law, or let's say prohibited under the law. I think you're the one that have seen this a lot, I assume. It would be great if we can know if really that's what happens in reality. But I mean, in terms of restructuring, it's a bit hard because of the reasons that I've mentioned. You're going to do a whole exercise, then it gets rejected. And again, this Egyptian factor that is not acceptable.
You're absolutely on point, and that's one of the challenges of trying to give a genuine advice that is actually the best of our ability to provide. There are workarounds, as I said, and the double tier structure, while it works today, a few years ago, if you recall, there was a change of policy, and they used to get to the UBO, and then every multinational in town screamed war, and especially a lot of US multinationals, and then the government retracted from that enforcement policy by just closing an eye and not looking at the UBO. So every advice we give to a multinational client when it comes to importation, as you correctly outlined, is really saying this is the policy today. It may change tomorrow, and therefore there is definitely a risk. But one of the innovative structures, other than the double tier, which has been persistent for some time, is taking advantage of the new amendments to the Egyptian companies law in terms of preferred shares. Now after the latest amendment, any company with a 75% approved can issue prep shares. And today, what we've been trying to do, and it does work in certain cases, is to allow the foreign investor, while he retains 49% of the equity, to have preferred shares, giving them control. So while it's not ideal, because there is definitely economic leakage and you don't have the full set, but it does give a lot of comfort to multinationals in terms of retaining control over the trading entity, notwithstanding they are an economic 49% shareholder. So that's one of the innovative legal, right? Because it is legal. You click the box 49 and everything that we've been trying to do, and that have worked with some of our clients. But definitely it remains an issue. Interestingly enough, if you do a comparative analysis, Yolanda, you'll find that a lot of countries have similar legislation. So this is not an Egypt-specific issue, you know, the national. If you look at the UAE or you look at Saudi and you look at all our sort of the countries in the MENA region, you will find the commercial agency and importation of finished product, not importation for raw material, because any multinational, just for the sake of the audience, any multinational can import freely its raw material that go into this production cycle. The issue is really finished products, right? And this is where there is these nationality requirements that are triggered.
Yeah, I think, but it's worth exploring that the government at some point needs to relook into this and consider the benefits that could come out of the fact that they could give a room for foreign companies in a way or another to import. I mean, they do give for services, like for example, when you have products that are related, are used under services contract, you can import these and resell them based on the fact, through, of course, an importer of record, based on the fact that these are purchased of warranty, some sort of after-sale support and so on, and it has its own approvals by NTRA. However, and this is something good, at least there's some room to do business in terms of spare parts, but also I believe there is the step that needs to happen to rectify this issue, because there are other aspects. For example, if you sell some sort of products, hardware through a distributor or a partner, and then comes a point where there is an issue around this product that was purchased, and for some reason there is no relationship anymore between the foreign company and the distributor and the partner, and the original fulfillment route, if you're willing to indemnify or compensate the end user, you will need to go back through the same route to market to fulfill and indemnify the end user. So maybe at some point the relationship between the distributor and the partner and the multinational is over, and in this case you will find yourself in a position that you're not able to easily, let's say, fulfill and fulfill the end user's needs. So I mean, there are quite some challenges that is worth discussing, but in general I believe it's still one of the points that were improved, but still needs a lot.
No, absolutely. Just being wary of time limitations and trying to really to cover all the topics today. So I'll try to move gears to another issue, which is sell-side strategies, and I'll try to be as brief as possible. I see that we're having a lot of questions going to fintech. So I think Mohammed is going to be very popular today, but maybe touching base on sell-side strategies. You know, whenever I'm advising a sell-side client, there's three things that I tell them. Number one, usually, sign a detailed term sheet. You know what I mean? It is key. And usually sellers are always worried and focusing on one purchase price, right? What is the purchase price? If we get it, then and what I tell them, other than the purchase price, what you should be looking for as a seller is deal certainty, right? Because without deal certainty, everything is hypothetical. So maybe first tip, for a sell side M&A contingent player is have a detailed term sheet and focus on deal certainty and deal closing, because otherwise you may be losing opportunities. The second important point that I think is very, very, very critical is trying to the process under which the transaction take place. So for example, when we do an auction, you find that sellers get much more favorite terms and have much more leverage on the process than if it's a one-on-one transaction with exclusivity, right? If the buyer feels, and I'm usually I usually represent the buyer, but if the buyer feels that they have control over the process and that they can basically take advantage of developers, let's take an example. The valuation that took place. Buyers today have a much more leverage on sellers in terms of determining what is the solution to mitigate the implication of effects. But an auction gives the sellers some relative control over the process and to be able to dictate terms. And if, in my experience, in most auctions that we've taken place, buyers, the fact that buyers were competing with each other always played in favor of the sellers. Not wanting to spend too much time on that, and I see that we're having a lot of questions on fintech. So maybe Mohammed, I'll let you address some of the fintech questions that we've been getting.
Yeah, thank you so much, Omar, for that. I want just to maybe give a quick background, because I sense of the questions that maybe a clarification of the overall fintech regulatory overview should be outlined, maybe in very briefly in 5 minutes. Okay, so first of all, taking it step by step for the banking fintech, it's just worth mentioning that fintech, a lot of people just are under the impression that fintech pertains only to payment, which is more or less inaccurate, because fintech is technically the use of technology in providing finance or services which are ancillary to financing and banking. So we might think few activities seen as pure technology, yet they are considered technically as financial technology. And I can cite, for instance, the technology service providers. And the technology service provider, all what they do is they provide the technology infrastructure and the payment gateways for the banking system and the fintech ecosystem for them to be able to seamlessly settle and clear financial transactions. I can also cite very quickly the issuing processing and the acquiring processing. Both are only based on pure technology. So again, fintech is a very large term. I don't want to spend a lot of time on this item, but I just wanted to clarify that for the banking fintech, we will have a lot of activities. Payment is amongst them, and also payment is a sector more or less in the financial technology. We have under the payment, we have payment facilitators, we have payment aggregators, we have the card issuance, the operators of wallets, we have the digital financing, and the digital financing as opposed to nano finance, which is operated and governed by the FRA. We have also direct banking tech, the banking surveillance tech. We have a lot of topics. Again, in the interest of time, I can shortlist the most important, or the most at least frequent and common activities in fintech. We definitely have the payment, and I think that the payment more or less are clear. I've seen amongst the questions that whether fintech player would need to have an agreement still with the bank. Yeah, that would depend. That's why maybe I defined fintech to get settled between the difference of banking fintech and NBFI fintech. For banking fintech, yes, until the moment we speak, if a banking fintech is willing to operate in the market, the most efficient way would be to partner up with one of the banks. However, partnership with banks or collaboration agreements, banking agency, you name it, with the banks are completely different in 2022 than they were in 2016 or 15. We've seen previously, maybe 8 years ago, it was basically that the technology company or the fintech company would just provide technology service provision. Everything would be controlled by the bank. Now we've seen tendencies of the bank just to give up on, a bit of control to the fintechs. For instance, when it comes to card issuance, we've seen a lot of banks willing just to be providing the BIN sponsorship, providing the BIN range for the cards, be solely responsible for settlements, and more or less giving a lot of outsourcing a lot of the services to the fintechs. And we can cite here the issuing processors. We've all heard of the companies mainly working in providing the technology platforms for processing cards. We have a lot of names in the market. We've seen also technology service provision, linking them with the different settlement platforms, the schemes, and the Egyptian switch, ABC. So again, for the banking part, if we're providing payments or cards or wallets, definitely we will need a banking partner just to get the license. And the licensing process in a nutshell would be to have a quick commercial understanding with the bank, then providing a licensing request letter drafted jointly between the bank and the fintech, usually issued by the bank itself to the CBE requesting licensing, whereby the letter usually will set out the main conditions and requirements, both by regulations and by the banking fintech practice that we've been establishing for the last 2 years, to make sure that everything is in place for the CBE to provide the license. Usually that would be proceeded with a very quick customer due diligence from the bank process for the KYC, and then where foreigners own or control the fintech company, there will be a need for a security clearance, which is we've seen a lot of progress on that front from the CBE, honestly, and the FRA. We've seen a lot of instances that the security clearance is finalized within 3-4 months, as opposed to 12 months. Yet again, usually the timeline would differ from case to another. So yeah, to respond on this question, I believe that fintechs, for sure, until now, will need an agreement with the bank. However, the banking law is leaving the room for few fintech players to be directly regulated by the CBE, and I can cite the PSP and the PSOs, the payment service providers and the payment system operators. Once the CBE issues the direct regulations to give them direct licensing, they will be able, and they will be sitting side by side with the banks, having a direct license from the CBE. Yet, as I previously mentioned, there are time to let the market adapt and just test the waters when it comes to how the market would respond, how the ecosystem players would respond. And then I believe by that time, the CBE will be in a better position to issue direct licensing. So that's, for instance, for the banking part. I've also seen question regarding cryptocurrencies. Again, the banking law clearly set out that the cryptocurrencies in Egypt are one of the biggest challenges. I think that the direction and the policy right now is to not to adopt, honestly, or give effect to cryptocurrencies and basically rely on official currencies in Egypt. Again, I think that would just align with the current circumstances. The CBE is absolutely right, just to maintain the stability of the economy and make sure everything is falling under the regulated umbrella. But I think, we never know what would happen in 5-10 years. Maybe there will be a place for cryptocurrency by that time, but at least in my personal opinion, not for the next 3, 4, maybe 5 years. So I think that also for the cryptocurrency, for the licensing steps for fintechs, that would also differ between a banking and non-banking. We're speaking about non-banking as we speak. We only have the issue bill or draft, the law of the NBFI fintech, and it provides 6 months for rectification, which can be extended to 2 years. In the interim, we expect the FRA just to issue more decrees given effect to this law within 6 months from its issuance, basically in August. But again, usually that's only a indicative timeline that might be moved up or pushed in practice. But again, at least the existing and the current licensing system would be that if you're providing an existing NBFI, let's just say consumer finance, then you would resort to the usual and common rules of obtaining consumer finance law. Sorry, I've been reading a question regarding the cryptocurrency and by Omar Zaki, which I'll definitely get back to it. So I was saying that if you go for consumer financing, then you would just resort to the usual and normal licensing for a consumer finance entity, having 25% financial institutions, 50% juristic persons, and minimum capital, and so on and so forth. And whenever the regulations are issued from the FRA as to consumer tech or the consumer finance tech, then they will have the right just to file for the license for the consumer tech at the time. So basically, that's one of the times where we have to sit tight and believe that the FRA and the regulators will just issue the right regulations and in a timely manner. Meanwhile, the existing players will either have to pursue the usual routes or wait until the new decrees are basically issued. As for the question from Omar about the cryptocurrency, honestly, not in my experience. Yani, the cryptocurrency, as I believe, is now out of the agenda, at least in my experience. But again, yani, we never know what could happen in few years. There is room for cryptocurrency to be regulated by law, but again, as part of the strategy of the CBE, I believe that won't be the case, at least in the very near future. And finally, just to give room to my panelists, finally, I would like just to say that In fintech, the most important maybe tools that are missing as we speak, and that more from an ecosystem and commercial perspective and also legal, I believe is the seamless and digital onboarding, and have everything basically on cashless and remote basis. So digital agreements, I believe, would be key. And the CBE law and the FRA and BFI law both provide a very small room for the regulators, CBE and FRA respectively, to issue certain decrees, regulations governing the authentication that would be required for digital transactions to be authenticated and accepted. We've seen that in settlements, we've seen that in reconciliation, maybe yet to be seen in the FRA part or the agreements, the onboarding part. Maybe we only have the cards that would be issued, the prepaid card. We've seen maneuvers in the market just to have everything to make a liveness check using sending GPS coordinates about visits to the card holders upon conducting the KYC and the customer due diligence, and then electronically that would allow the courier or the banking agent to capture a live image or a video of the card holder for liveness check, as well as the document. So all of these are attempts to make the ecosystem as seamless as possible. Yet I believe that we will be expecting from the CBE, the eKYC regulations, because this is the key, honestly, in the industry. And I personally, I know a lot of investors and companies that would be very interested in entering the Egyptian market, penetrating the Egyptian market as soon as these regulations are in place, to be honest. As for the FRA law, and that's my very last point, also the law have given room, notwithstanding the electronic signature law, for the FRA to issue a lot of requirements and conditions for electronic transactions to be accepted and legally binding and enforceable. Also, apart from the fintech law, but for the electronic transactions, we know that there's a draft in the parliament governing the e-transactions law, which is more or less very similar to what we've seen in the KSA and the UAE. So we're expecting to have this by end of year, maybe early next year. And hopefully by that time, we would have a complete or a quasi-complete ecosystem, not only for fintech, but usually for technology enablement. So sorry for consuming a lot of time, but I think that was
thank you very much, Mohammed. That's been very helpful. Thank you very much for that sort of comprehensive overview. Trying maybe to take, again, with none of the time limitations, trying to address some of the questions of the audience. I think I had on the sell side, I had mentioned 3 tips. I may not have mentioned the third, and thank you, Hadi, for pointing this out. I think the third one is time. Really, time is seller's greatest enemy, right? If a transaction drags for more than 5-6 months and deal fatigue becomes an omnipresent factor, it really diminishes the potential that this deal will close. And the longer the transaction drags, the more the seller is susceptible to X factors. For example, we have transactions that started over a year ago, and we were about to close, and then all of a sudden, the Ukraine Russia conflict takes place, and then the repercussions on that. So the longer the timeline between term sheet to closing is, the less chances of closing happen. So my advice to sellers is, let's put a clear timeline, let's be as efficient as possible, and let's try to minimize, to the extent feasible and practicable, the X factors that can effectively come in just and basically prejudice or jeopardize the entire transactions. One other question that we're talking about, in terms of trends and sellers to buyers, when I started doing M&A some 20 years ago, for example, we used to see liability caps of 80% and 100% and 75%. Today, the omnipresent standard, the market practice, is you would, in a typical transaction, there are exceptions here and there, of course, but the vast majority of transactions, you would see an expected liability cap of 25%, 20%. You would typically, you would have the warranties to survive for 4 or 5 years. Today, if you're lucky, you get 24 months or 18 months or one audit cycle. So there's a lot of changes that have really affected, that work for sellers, but also work for buyers in terms of the new trends on the M&A landscape. I hope that answered the question. Back to you, Alan.
Omar, thank you. You're right on time, but there are many questions. So if you want to take a couple of minutes to answer, maybe to take one more. I'm sure that the production team will forgive us. We've had so many. Otherwise, I understand that we've taken quite a bit of time, and to our audience, just know that there will be a follow-up. I'm sure Omar can follow up, and do not hesitate to contact him at Matuk Bisyoumi or our other panelists. But yeah, Omar, I don't know if you want to take what.
Sure, no, happy to do that. I'll try to take some of the brief ones. So for example, data privacy, I think that's a very important question, because there is a new data privacy law. The executive regulation is not yet issued, so we don't know exactly how this is going to be applied. So we're a bit in the dark. But yes, there is a new data privacy law. It will definitely impact M&A transaction. It will definitely impact the due diligence process. The law envisages that each company should have a data privacy officer. So definitely, it would definitely have an impact on the diligence. But also, how do you implement? And this is where we're all very keen to see how the executive regulations would be promulgated. Because if you're in your due diligence process and you're opening your books and you're opening your data, how to a contingent buyer, right? Because in any M&A transaction, there's no certainty that the deal will close. How do we going to address that? So I think everyone is waiting for the executive regulation and to see how the enforcement and application of the data privacy law. But definitely, it will definitely have an impact on M&A. Other things that are as relevant, for example, and that will also have a major impact on M&A if promulgated. So the Egyptian cabinet has approved a prior approval regime for antitrust. Just for everyone's sake, today, once you close an M&A transaction, meeting certain threshold, you have to notify the ECA within 30 days after closing. So we don't have a prior approval regime, except then in specific cases where the ECA has taken a strict approach with respect to some tech companies merging in the past. But the cabinet today has said, has approved and has passed to Parliament a draft law that any transaction meeting certain thresholds will require the prior approval of the ECA. Obviously, and that's not sector specific. So we will see again what is the final draft of the law. But that's another piece of legislation that's in the pipeline that will definitely have a major impact on M&A and the dynamics and parameters of M&A. I'm just way off time, Alan, and I will try to pick one last one. SPACs. So yes, SPACs is very cool and it's very trendy. And I think we've seen Swivel, and that I think they're just they're just today. SPACs, there is a legislation by the FRA regulating SPACs. We're actually doing currently the first one. I don't know if another firm will precede us in terms and get it off the finish line. But it is there, and I think it will meet a lot of attraction from private equity players in terms of trying to take advantage of the SPAC parameters in Egypt. So the regulation is there. We are still testing the enforcement, but definitely it's going to be very, very, very beneficial to private equity players specifically in terms of diversifying or raising funds for their investments.
Thanks a lot, Omar. That was great. So again, we received a lot of questions. So if we haven't been able to answer yours, I'm sure there'll be a follow-up. And again, do not hesitate to contact our panelists. Thank you very much. That was remarkably interesting, actually, and very useful. Huge thank you to Matuk Bisyoumi, to Randa Ayman, Mohammed, Amr Abdurrahman, and to you, of course, Omar. Thank you to Melissa for helping behind the scenes, and to our audience today. And we hope to see you at another webinar shortly. Goodbye.
Thank you very much, Anne. And it's been a pleasure to collaborate with Legal 500 and all our esteemed panelists. Thank you very much.
Thank you all.
Absolutely. Thank you so much.
It has been a pleasure.
Bye-bye.
Thank you all. It was great to have you all on this webinar. Thanks. Bye-bye.
Bye.
Thank you. Thank you.